Hello again. So anyway, I've just been out at an investor show in the UK. I'm back on the continent, and I think probably you're quite interested in what's going on in gold. Everybody's talking about gold. Everybody thinks it's going to the moon. Some people think it's going to go back to Earth, and it's certainly had a wild run. We're going to be talking about gold. Firstly, I want to say and thank all the people that have taken up memberships. We'll be doing 1 or 2, maybe even 3 membership videos a month, which will talk about basically more complicated, more technical issues in investing and trading. And I'll be touching on a few of them in this video. And if you want a deeper dive into these things, that's the sort of thing I'll be talking about in my membership-only videos, the sort of deep technical microstructure stuff that actually drives the market. And, you'll be able to glean a few of those ideas in this video. Now, when assets go and reprice, they don't go to the moon forever. I think a lot of investors or speculators or whatever you want to call yourself or me will have been spoiled by Bitcoin, which started at 2 cents a Bitcoin, is now $100,000 a Bitcoin. And that is a asset that really has gone to the skies. The old Chinese investment proverb is trees don't grow to the skies, which means that there's only so far up you can go before that's the limit. And that's the same for all assets, even Bitcoin these days, that they can't keep going up. They have to stop somewhere. And gold has had a great run. And now the question is, are we at the top, or have we got some way to go? Now, the way to look at it is that you don't know, but you can watch and then slowly but surely make your call. You can have a very big picture point of view, like I do, and that can inform you. But, really, we're all guessing. And that's why we are speculators, because we're speculating. But anyway, let me start with my point of view. My point of view is gold has a use case. It has several. It used to be used in teeth. I'm not sure anybody does that anymore, but you never know. Electronics. Obviously, gold is used in electronics, all those edge connectors, and that's a pretty big use case, funny enough. And then there are other usages, like, for example, jewelry. And who doesn't love a gold ring? Who doesn't love a gold watch? Who doesn't love gold earrings? And that is a use case for gold. Now, the main use case for gold is as investment. But actually, that's not the case. It's the case for us. Our main use case for gold is not gold watches, teeth, electronics, it's investment. And the big use case is for governments to store it as a currency in conflict. It's the money of last resort. When I had that thought a few years ago, I went, oh, okay, of course, it's obvious. Gold is for war. That's why governments keep it. They're not going to remonetize it. I say this over and over again. Why do they keep it? So you could turn that question around and go, what is the use case of gold? Well, for governments, the use case is the money of last resort. And that last resort, of course, is war. So gold is for war. Well, when all these recent developments started to accelerate back at the beginning of the year, it was obvious to me that gold was going to run a long way. I'd already seen it break out and written some articles for Forbes saying, oh, look, gold's broken out. Oh, that means it's going to run. Well, it's run and it's run and it's run. And it's run to the level around which I predicted it would go to, which was initially 3.5 and then sort of middle of the 4,000s. And that's where we are, that's where we've gone, and that's where we've stopped. We've reached the top and that's where we've stopped, and that's what's bothering me, to use the lyrics from Jungle Book. So the question is now, have we seen it? Is that it? Is it all over? Or have we got another leg to go? Well, what happens when assets reprice is they get to a repricing level and then they stop and then they go sideways. And then the market decides whether it's going that way or that way. And that is where we are now, at a repricing equilibrium level. Let me break that down. It's equilibrium because buyers are matching sellers, and therefore the price is not going very far, or certainly not going in one direction apart from sideways. And that band is the level of uncertainty amongst the buyers and sellers. And as you can imagine, as holders, you're probably uncertain, more uncertain now than you were a few days ago. And people who are buying are more uncertain. People who are selling are more uncertain because who knows, it might be going up. So the range of that sideways trading is wide. And what happens is as time passes, people get more sure of what's going on and that range shrinks. And it shrinks and it shrinks and it shrinks. And then suddenly the market decides this price is too high or this price is too low. And then away it goes. Now in my model, gold is full war. I'm sat here going, well, where are we on that road of ever-increasing tension? Well, it almost feels like we haven't even started. So what exactly is going to make that tension drop? Now, you could say, well, obviously, at some point, Ukraine and the Russian conflict is going to end. It could. How's that going to affect gold? Well, is that the big issue in global stress at the moment? No, it's not. It's America versus China. If Russia suddenly got sensible and called the whole thing off, well, would that pull gold down? Probably would, a certain amount. But would it complete the picture of ever-increasing global stress? Or would it just shift towards America versus China? If you think about Ukraine, it's a smallish country. Think about Russia. You think, oh, enormous country, a massive wealth, powerful. But it's 150 million people with an average GDP of $7,000 a head. You could check the numbers. I might be a little out, but not by far. So if you look at the EU, it's 500 million people, and the average GDP per head is, I think, 28,000, something up there, anyway. But when you multiply GDP by the number of Russians, GDP in Europe by the number of Europeans, you can see that Russia is a small country making a big mess. So if you look at China, 1.4 billion, 1.5 billion, 1.2 billion, depending on whose numbers you believe, with a GDP per head of a quarter of America, America with 350 million, 360 million, whatever your number you want to use, and their GDP, that's a vast economic power to enter into a toe-to-toe conflict. Way more significant for gold than Russia versus Ukraine, or for that matter, even Russia having a standoff with Europe. And that's what is coming. And according to anybody who is familiar with these figures, it's coming in 2027. So 2027 or thereabouts would be the next target for a high of gold. Well, that's a long way off. And it doesn't seem likely that gold's just going to sit here and go sideways while we step towards 2027. And you might say, what is 27 got to do with it? Well, that is when I used to say Xi, but I've been corrected. That's when she has told the PLA on its 100th birthday to be ready. I think that's the almost exact words. Ready. Ready for what? Not ready for good things. And of course, the big promise is a reunification of Taiwan. So those people who theorize on military issues and security, they see 2027 as the moment, the definitive moment of the beginning of a conflict potential between US and China over Taiwan. So gold should be going that direction until then, or to when the parties involved in it have come up amongst themselves with a nice future of peace and harmony. Could happen. We've got a pulse of gold here, and it will trade sideways. And we can watch it do that, and we can watch the uncertainty shrink away. But if the drumbeat of conflict continues to beat, it's going to be beating towards a point in 2027, the 100-year anniversary of the People's Liberation Army, and the arrival of the promise or the delivery of the execution of the order to be prepared by 2027. Now, all this stuff is out there on the internet. You can go and find it, and you can verify what I'm saying. So that 2027 date is a real thing. And it's 18 months, 2 years, maybe less. Well, between now and the beginning of 2027 is not that far. Now and the end of 2027 is a year further out. But I would expect that the price of gold would continue to rise, or at least remain at these levels until then. And then, of course, what happens next defines where gold's going. And that is, at this stage, completely unknown. If it was known, gold would be moving. If it was known, all the US defense stocks would be moving. And they have recently ticked up. If you want to see perhaps where gold is going, or perhaps the other way around, where the defense companies in America are going, you keep your eye on both. And one will probably lead the other. That's my read. I am long gold, silver, platinum, palladium. I'm long those metals because I believe the drumbeat of international geopolitical stress will continue and increase, and that will only do one thing, and that is push the price of gold. I could be wrong. We're speculators, therefore we just watch the signs and interpret them. And now there's no reason to believe in my mind that gold would pull back far from where it is today. So here's the chart. I think we're probably all familiar with that. And I did a video, a membership video recently, about the way that markets reprice. And you see it's repriced, and now we're probably going to get a range between 4,000 and the peak, maybe a little higher, that will go sideways until the market decides whether it's going down or going up. And because markets have this habit when they reprice of going halfway or all the way, those two lines you see is a suggestion, if we're halfway, where we're going to end up in the full move that we've been on recently. And as you can see, it's 5,000. So you would go, well, everybody's expecting 5,000. And when I draw that chart of halfway or the whole way, the destination is 5,000. So to me, that is what is likely to happen next, a move to 5,000. Thank you very much for watching. If you want to be a member, please join up, and you will be getting an occasional, what I call secret squirrel information from theories that I use to make money in the markets. They're very simple. You won't see me drawing loads of lines on charts. They're simple like this one I've just shown you. If your theories are complicated, they're normally not going to work. And if they're simple and obvious, you're on solid ground. Anyway, see you again soon. Bye now.